In the modern world, wealth is rarely a matter of luck, but rather a calculated game of patience and deep psychological strategy. The global economy operates like a silent machine, rewarding those who understand its hidden gears and quietly breaking those who merely chase the illusion of quick money. If you commit to understanding the blueprint laid out today, you are not just watching another presentation. You are acquiring the precise keys to financial sovereignty that less than 2% of the population will ever master. The average person spends a lifetime waiting for a sudden stroke of fortune, paralyzed by a lottery mentality that keeps them entirely dependent on a system designed to keep them poor. To truly break away from the crowd, you must replace wishful thinking with an unyielding, structured system of long-term asset accumulation. True financial power begins far before you ever buy a single share of stock or acquire a piece of real estate. The foundational law of accumulation demands that you aggressively widen the gap between what you earn and what you consume, especially during your most productive years. Forget the conventional, restrictive advice of eliminating every small pleasure, as misery is a terrible foundation for wealth. Instead, focus the entirety of your analytical energy on scaling your core income through specialized, high-value skills and scalable business models that completely detach your time from your earning potential. When your revenue begins to surge, you must consciously maintain an iron control over your lifestyle, treating that surplus not as spending money, but as raw fuel for your investment engine. Once your income is elevated, your immediate tactical move is to completely eliminate any high-interest consumer liabilities that are quietly draining your economic leverage. Immediately following that, you must establish an absolute reserve fund, a financial fortress consisting of 3 to 5 months of complete living expenses held in liquid cash. This reserve is your ultimate shield against systemic recessions, unexpected market crashes, or sudden shifts in the global employment landscape, ensuring you never have to liquidate your long-term assets during a downturn. Only when this flawless defensive perimeter is fully constructed can you safely step onto the battlefield of active wealth multiplication. The most logical entry point for serious wealth preservation is the world of index funds, which allow you to own a fractional piece of the entire global marketplace. Unlike individual stocks, which expose you to the volatile whims and potential collapse of a single enterprise, a broad market index fund like the S&P 500 distributes your risk across hundreds of the most powerful corporations in existence. You must actively avoid the trap of expensive, actively managed mutual funds, where high management fees quietly erode your compounding interest over decades to pay for underperforming fund managers. By utilizing passively managed, ultra-low-cost index funds, you ensure that over 99% of the market's natural growth stays exactly where it belongs, inside your own portfolio. For those who demand tangible control over their capital, real estate represents the ultimate arena for generating predictable, generational cash flow. The elite investors in this space do not buy property based on emotional speculation or the hope of rapid price appreciation. They strictly adhere to rigid mathematical rules of cash-on-cash return. If a property cannot reliably generate enough rental income to comfortably cover its debt service, maintenance, and taxes while leaving a clear profit margin, it is rejected immediately. This disciplined approach transforms real estate from a stressful, hands-on job into a highly predictable, inflation-protected banking system that pays you every single month. When you choose to allocate a smaller portion of your capital into individual corporate equities, you must completely abandon retail trends and instead operate with the clinical precision of a newsroom editor. You must evaluate opportunities through 2 distinct lenses, beginning with a strict quantitative analysis of audited balance sheets, free cash flow metrics, and quarterly earnings reports. This must be balanced with a qualitative assessment of a company's structural moat, including its leadership vision, cultural relevance among younger demographics, and technological dominance in shifting global markets. Never risk a single dollar on an enterprise whose underlying business model you cannot explain clearly in less than 2 minutes. The absolute pinnacle of financial mastery lies in private equity and direct business investments, where you combine raw capital with your personal network and specialized expertise to capture massive equity upside. By positioning yourself as a strategic partner rather than a passive observer, you gain the unique ability to influence the outcome of the venture and secure highly favorable terms that are completely unavailable to the public. Wealth, in its purest and most refined form, is not about lavish display. It is about the absolute control over your own time and the total elimination of financial anxiety. Your journey toward this level of freedom requires absolute consistency, emotional detachment from market noise, and a relentless commitment to the compounding process starting today.